Hello from Trend Signal for our review of the data and events of the week beginning the 21st of March. Before looking at the data coming out this week, I just want to have a review of certainly what's happening at the moment, following over the weekend, and really what happened last week. Equities, certainly on Monday morning, are slipping a little bit, although have recovered from the opening falls a little bit. Oil certainly easing a little bit from its highs might be one explanation. The quarterly expiry last Friday passed without any great moves. Often it does or can result in a little bit of volatility, and some traders tend to sit on their hands at such times, but no major ructions there. The time difference between Europe and the US remains at 4 hours for another week. We have our British summertime, our clocks going forward this coming Sunday on Easter Day, actually, and that's the same across the whole of the Eurozone. So the usual 5-hour difference with the US will be restored as of the following week, but we have one more week, as I say, of a difference of just 4 hours. It's a shortened holiday week. We have Good Friday this Friday, which is a holiday across the board, really all markets, certainly Western markets anyway. On Monday, that is the following Monday, that is also a holiday in much of the Eurozone and in the UK, but the US has regular hours. Okay, first thing in the markets this morning, on Monday morning, the resignation of Ian Duncan Smith, the Works and Pensions Minister in the government. Following his resignation, it seems there's a lot of Tory infighting at the moment, but the impact on equities and sterling is pretty muted, really. The only other bit of news last week that had a major effect, obviously, was the FOMC downgrading of rate hike expectations. Really just puts them in line with the market. Dollar weakness partially reversed over the past day and a half, though. So we have seen the dollar rebound modestly from the initial falls. So last week, equity markets quite steady. FTSE up 50. The Dow Jones and S&P very strong. Certainly the Dow up 388 points, 2.25%. The S&P 500 up 27, 1.33%. The DAX in the Eurozone, just a good reasonable benchmark, 118 points higher, that's at 1.25%. But the Nikkei stuck out like a sore thumb, down 214, down 1.25%. And the ASX All Ordinaries in Australia up just slightly, up 14 points, or just over 0.25%. Yeah, well, the story is US markets Friday, they actually managed to recover all of their losses, temporarily albeit, from the first 5 weeks this year. Both the Dow and S&P eclipsed their previous highs of the year, although, as I say, the S&P has slipped since then a little bit. The Nikkei, well, that's really been hurt by the continued appreciation of the yen. The yen last week rallying another 2.25% on the week. Not good for Japanese exporters at all. Eurozone markets, I guess, also hampered by strong euro, although, as I said, it slipped Friday as traders took profits following the FOMC Wednesday evening event. On the week, the euro up 122 points, just over 1%. Sterling, not quite as much, so sterling slipping a little bit against the euro, but recovering about a cent against the dollar, which is what, just over 0.65%. And the dollar yen, well, as I've just said, 226 points, another sharp fall, down 2%. And the Aussie, incredible rally since the beginning of the month, up another 38 pips or 0.5%, but it's had an astonishing run. But I think that's starting to take its toll on the Australian stock market. Right, well, apart from the CBI comments, which does paint a fairly gloomy picture, there's nothing too much that's really rattling the market. If anything, that underpins the stay side of the equation in the upcoming Brexit referendum. The CBI painting a fairly gloomy picture for any undecided voters looking at the impacts on the UK economy should we vote to leave. So I think it's more likely that the market's going to react to upcoming polls regarding Brexit than any problems with Ian Duncan Smith and the government on the budget. Although that could start to get a more out of hand, but certainly the markets haven't reacted that much. Gold. Just a quick look at gold, up another $6. Curious that equity markets, certainly Western equity markets, have recovered most or all of their losses this year, but gold has not declined as perhaps some might have thought. And I think partly down to a weakening US dollar and an uptick in inflation, perhaps, certainly in the US, and paradoxically, concern in the Eurozone, certainly, that of central banks' ability to resurrect growth. And of course, the general recovery in the commodity sector, base metals and precious metals, have all done particularly well. Okay, well, that's really what's going on. A general recovery in commodity markets helping certainly the resource sector. That's benefited the FTSE, but the overall tone in the markets has been positive now since certainly since the beginning of of March, or even halfway through February. Okay, let's have a look at the calendar for this week. It is very, very light indeed. It's a shortened holiday week. As mentioned at the beginning of this piece, we have a holiday this week, both in the US and the Eurozone and the UK. So it's just 4 days, and there's very little data out. The key events this week are the two surveys out from Germany. The Ifo Business Climate, which is a very wide-ranging survey, which carries quite a lot of weight, slightly better than the previous month we're expecting. But the German ZEW Economic Sentiment Indicator, which they survey analysts, which is a smaller survey, but nevertheless very market impactful, and quite an increase there for the market expectation, 6.3 versus 1 the previous month. Crude oil inventories will be quite interesting on Wednesday. Please remember, it is still a 4-hour difference, so don't be caught out again. Normally out at 3:30, that's out at 2:30. And with oil hitting $42 at one stage on Friday, the market has come back at the beginning of the current week, but that will obviously be something that can impact that market. One bit of data I've just actually jumped over is the inflation data here in the UK. CPI out at 9:30 on Tuesday. Quite a bit of an uptick. Nothing like the Eurozone's negative 0.2. We're expecting plus 0.4% here in the UK, still well below the target rate of 2%. We then jump to Thursday, 9:30. We have our retail sales. They are expected unchanged. In fact, expect a little bit weaker, I apologize. And then we have, in the United States, core durable goods orders out at 1:30, and the regular weekly unemployment claims. We do actually have a release on Friday, which is the final reading of the fourth quarter GDP in the US, and they do publish data like this on a bank holiday, strangely. Of course, the market won't have a time to react to it until the opening on Monday morning or Monday afternoon for the US markets, and we will not have a chance to react to it until Tuesday. It is the final reading, so it's not quite so important, but there we go. That's it for the week and this week's events. Thank you very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.